All right, let's talk Washington Trust, ticker WASH. They dropped their Q4 earnings, and wow, it looks like there's a real shift in their game plan. We're going to dive into what's behind this margin expansion play.
You know, for most of last year, regional banks were all about playing defense, right? Just holding on to deposits, managing the balance sheet. But Washington Trust, their Q4 call felt totally different. It's like they're flipping a switch. So the big question is, are they really pivoting to offense?
Okay, so first things first, let's look at the headline numbers. This is what got the market so excited. And honestly, it was a super clean beat pretty much everywhere you look.
So their GAAP earnings per share came in at 83 cents. Now, you got to remember, Wall Street was only expecting 75 cents. That's not just a beat, that's a beat by more than 10%. Pretty impressive. And it's not just on the earnings side. Look at revenue. They pulled in $59.25 million. Again, way past the consensus of about $56.4 million. But honestly, the real story here, the thing you really need to see, is the year-over-year growth.
Yeah, this is what I mean by a quality beat. Total revenue is up over 20%, which is great. But look at their core engine. That's net interest income. It's up a whopping 24%. This tells you the beat wasn't some one-off thing. It was driven by pure fundamental profitability.
So the natural question is, how'd they pull this off? And maybe even more important, what's their plan from here? Let's dig into management's playbook.
Okay, if there's one acronym you need to know for this quarter, it's NIM, net interest margin. It's basically the lifeblood of a bank's profitability. For Q4, Washington Trust posted a NIM of 2.56%, but, and this is the key part, management made it super clear that this is just the beginning. And here's the money quote right from the call. The CFO, Ron Osberg, he basically laid out this super direct, super confident roadmap for big-time NIM expansion all the way through 2026. He's talking a range of 2.78 to 2.82%. You know, that kind of clarity, that's exactly what the market loves to hear.
And look, they didn't just throw a number out there and say, trust us. Nope. They spelled out exactly how they're going to get there. It really boils down to two key things. First, a big balance sheet move. They're terminating a swap, and that alone is going to add a solid 13 basis points. And second, just steady organic growth, adding another 3 to 4 basis points every single quarter.
So you can see how this all fits into the bigger picture. Their whole strategy is shifting. 2025 was all about defense, right? Just holding the line on deposits. But 2026, it's all offense. They're going after commercial and industrial loans, that's C&I. They're making strategic hires, and they're even expanding.
And again, this isn't just talk. They gave us specifics. They've already hired a whole new banking team to focus on that C&I business. They're opening a brand new branch in Pawtucket. And they've put a number on it. They're targeting around 5% loan growth year over year. The key here is it's all about high-quality loans and the great deposits that come with those relationships.
Now, of course, all these investments, they aren't free. Management was really upfront about this. They told everyone to expect about a 6% jump in expenses in Q1 to pay for all this. But they also said they expect things to level out after that. So the market is definitely going to be watching to make sure this spending actually turns into the growth they're promising.
Okay, so we've got the story from inside the bank. But how does all this stack up against everyone else? Let's zoom out and look at the bigger picture.
Man, this chart really says it all. In just the last 3 months, WASH is up over 24%. And that's not just beating the S&P 500. I mean, look at the SPY, it's barely moved. They're also absolutely crushing their peers in the regional bank index, the KRE. It's crystal clear that investors are buying this margin expansion story big time.
So, with a run like that, the big question is, what's next? From here on out, it is all about execution. Can they actually deliver that NIM growth without credit quality taking a hit? Was that 6% expense jump in Q1 really just a one-time thing? And can this fancy new C&I team actually bring in that 5% loan growth? These are the questions.
All right, with all that in mind, let's get to our take. What are we thinking and what are we going to be looking for on the next earnings call?
So we're going to break this down into 3 simple parts. First, our outlook for Q1. Second, what we think is going on with the stock's price. And third, we'll wrap it all up with our official rating.
Okay, so here it is. When you look at the super clear path to margin expansion that management laid out, their squeaky clean credit quality, and these smart, targeted investments, for us, the rating on Washington Trust is a solid outperform. All the pieces really seem to be falling into place for some real fundamental strength ahead.
All right, now for a trade idea. And our whole thesis here is that, yeah, the stock has had a nice run, but we don't think the market has fully appreciated just how certain and how big that 13 basis point NIM benefit is going to be later this year. So one way you could potentially play this is with long call options, dated for after that Q2 earnings release. It's a way to get exposure to that very specific catalyst, but with a defined amount of risk.
And of course, we have to say it, this is not financial advice.